Hi guys, my name is Ruhaan and today's topic is the impact of potential tariffs, how to get your business ready. So start our topic. Table of contents. What are tariffs and how do they work? How to utilize analyze whether your business is at risk from tariffs. Complete a sensitivity analysis. Review your cost structure. Productivity is key. Develop a diversification strategy. What will be the impact on supply chain? View more. The possibility of tariffs being imposed by the new United States administration on cross-border trade is causing uncertainty and rising questions about Canadian entrepreneurs. Chef, among these questions are, will I be impacted and how can I prepare? This blog aims to answer these questions, help to get your business ready and mitigate the impact of potential tariffs. And remember, never let a good crisis go to waste by preparing and evaluating potential impacts early and acting precisely. You may even be able to unearth opportunities to expand your activities by taking export market share away from your competitors. What are tariffs and how do they work? A tariff is a tax imposed by a country on imported goods. Tariffs are usually imposed and collected by a country customs authority or agency when goods cross the border. Tariffs aim to increase the attractiveness of domestically produced goods relative to imported goods. Buyers are usually responsible for paying tariffs. Importers may ask their suppliers to adjust their prices to absorb the price of tariffs. You can quickly get tariff information for specific products and countries where Canada has a free trade agreement using the Canada Tariff Finder tool. The government of Canada has additional online tools to search for tariffs by product and country. Export Development Canada EDC has more information on how tariffs work and how they can affect international trade. How to analyze whether your business is at risk from tariffs. Keep first abreast of the latest news and updates. Tariffs haven't yet been formally announced, therefore you can't fully quantify your expenditure. However, you can create scenarios to understand how potential tariffs would impact your business can and help prepare your business assess impact. If you export, you will probably want to calculate the potential impact on sales caused by the tariffs imposed to US importers. The simplest way to do this is to add the proposed tariff percentage to your current export price. For example, if the tariff is 25%, multiply the current price by 1.25. Therefore, a good currently sold for USD $100 will now by purchased by your client your for US $100 x 1.25 US 125. This means that your American customers will end up paying US dollar 125 per bid instead of the US $100 they used to pay. You would still receive the credit to with the American collections agency collecting the difference. If you operate within a competitive market, the demand for your product at this inflated price point may decrease as buyers explore different likely domestic options. Buyers may also ask you to reconsider your margin to either fully absorb or share the additional new cost. You would also need to consider whether the US evaluating to makes sense for your price. For example, changes in the exchange rate might given you more or less price flexibility will changes in a supplier's cost, whether they are tied to tariffs or not may impact your cost structure. Complete a sensitivity analysis. You will likely want to create different scenarios considering these possibilities to understand the impact on your business. This exercise is called a sensitive Witty analysis, this is sensitivity analysis, a financial model that allows you to understand the effect of changes in selected variables on your business's profitability. Should address the following questions. How will the higher price impact demand for your product? Are there key competitors in your target market who can undercut your new fee price? How will lowering your sales volumes impact your business? If you were to adjust your price to decrease the impact on your clients, how will lower prices impact your finances? The introduction of tariffs is likely to weaken the Canadian dollar, called a fluctuating Canadian dollar, counterbalance the impact of tariffs on your prices. Will there be impacts on the indirect costs such as increased shipping fees or other supply chain adjustments? The process for completing a sensitivity analysis is explained in this article. You may want to reach out to an accountant and a financial engineering management expert to help you carry out this exercise. Check the impact of changes on quality. As entrepreneurs know cash is king, you should not overlook the impact of changes of sales prices or input uh, cost on your cash flows. You can use simple cash flow calculator to list all the money coming into your business and compare it with the money going out. This exercise aims to figure out how much money you will have on a week by week or month by month basis and to forecast any potential shortfall. Let's assume, for example, you have a business with $10 million in sales, of which 60% is to the US. Let's also assume you have a 35% gross margin on sales to the US. If the Canadian dollar stands out at 0.69 cents to the dollar, this would mean you currently have a $2.1 million gross margin on your US sales. Current situation. We called then create two scenarios to try to understand the impact of tariffs on your finances. Scenario 1 assumes a 10 per minus dollars reduction in sales volume, while scenario 2 assumes a minus 10% reduction in your sales prices. As you can see from the table below, a minus 10% reduction in sales volume and will result in a minus 3.5% reduction on your sales gross margin on your US sales. Because of the exchange rate, this will lead to a shortfall in your cash balance in Canada. The table also shows that the minus 10% reduction in sales will have a much lower impact on your cash inflows than reduction of your sales prices, resulting in a impact on cash flows. If you love cash flow modeling and have the time, you can look at the different scenarios. You can also talk with your accountant or a financial management expert to see if they can help. If you foresee a cash shortfall, then you will have data to make a working capital loan request. Reach out to customers and suppliers. Call your main customers and confirm that existing and planned orders are still on track. If they are not, then change your forecast accordingly. You will also want to talk with the suppliers about potential downstreams of introduced tariffs. Collaborate with and assure them and ensure that you are on the same page with regards to how tariff impacts in fact affect the price of availability of the good you buy. Customers or suppliers, you may ask you to absorb a part of the entirely of the tariff related price increases. If that's the case, scenario will allows you to understand your absorption capacity and how much you can afford to give up in terms of margin and cash, as well as other decisions you may want to explore to reduce the impact on cash flow, rather that be on pricing or cost. Working with your lawyers and financial advisors, you may also want to explore cases in your client and suppliers contract to protect yourself against significantly price fluctuations. or to increase the predictability once the tariffs are introduced. You can also take this opportunity to analyze your supply chain to identify alternative suppliers by optimizing your supply chains. You can reduce dependency on high cost resources and improve overall resilience against the economic fluctuations. Do you need to change your pricing strategy? The easiest solution to new tariffs is for consumers to pay the added cost. Companies raise their prices all the time for various reasons. Higher freight rates, changes in material cost, and inflation expectations are all examples. Tariffs become another element to consider in your price structure and associated negotiations. Market research to understand what clients are willing to pay and what competitors see charging is key. Introducing tied pricing options to cater to different customer segments or dynamic pricing based on market conditions could be explored. The inclusion of more valued added services may help justify higher cost if your client value these services. Bear in mind that you may be able to share the burden of tariffs beyond the products that are directly affected by the tariffs. For example, if you have a higher margin product line or markets where your clients are less price sensitive, you may be able to change your pricing strategy on these products to markets to compensate the impact of tariffs on products or in markets that are more price sensitive. Continuously monitor the impact of your pricing changes on sales and customer behavior. Be prepared to adjust your strategy as needed based on feedback and market conditions. Review your cost structure. If you realize that you will not be able to profitably meet your US sales target because of new tariffs, then you must review of your cost structure. This will involve asking thought questions. Is my business efficient enough? Are we paying too much for our raw materials? Can we afford our fixed cost? Can we make product specific designs or manufacturing changes to reduce production's cost? Should we deprioritize or pass out other products? You may want to review your recurring indirect cost to see where you can cut out cost. For example, so you can still afford your current stuffing levels in support functions. Are you able to reduce rent? Can you reduce some of your communication expenses? And that's join up with other entrepreneurs. Joining a chamber of commerce or trade association can help you assess support and resources in this uncertain time. By joining this organization, you can also be part of a collective voice that represents your interest, making it more likely that policy makers will hear your concerns. Finally, this organization hosts events and workshops to help you meet other businesses owners too, or professionals and community leaders to build relationships and find partners. They can also provide valuable insights into how other businesses are in navigating tariff challenges and help uncover potential solutions. BDC is here to help. BDC has always been there to help entrepreneurs during difficult times. To current situation is not different. That's the in an uncertain environment. You may rightly be worried about taking on too much risk to invest in your productivity. However, many of these strategies can be implemented without needing much investment. For example, many companies do not fully realize the benefits of past productivity investments because they have not changed their ways of working to adapt to the for new technological capabilities. Therefore, ask yourself: have I fully taken advantage of my past technological investments? Have I updated my process and trained my people to maximize my return on investment? Develop a diversification strategy. Most Canadian exports follow to the US, making the proposed tariffs particularly difficult for Canada to deal with. For Canadian entrepreneurs, experts have long tagged of the need to diversify or experts markets. However, for a business, finding new external markets is not the only way to diversify. Selling more to clients in Canada, for instance, is probably the quickest way to make back some lost revenue because of the tariffs. What will be the impact on supply chain? Business may need to find new suppliers or materials that are not subject to tariffs, which can disrupt established supply chain. Companies will also need to adjust their inventory strategies to manage increased costs and potential delays at the border. We are working with partners at EDC, the Trade Commissioner's Office, and other across the country to offer resources and support for business owners and concerned about the impact of potential US tariffs. We are also monitoring the situation and continuing to gather insights and information to help your business. Don't hesitate to contact us if you have any questions or think we might be able to help you as you face this period of uncertainty. So friends, my topic is complete. See you in the next video. Take care. Bye.